And my next guest has even more data points showing some softness in the labor market. Let's bring in Sohn now. He's the CEO of AI-driven workforce data company Aura Intelligence. And Evan, makes me feel a little cautious about tomorrow, cautious about the next few months. Do tell, tell us everything you're seeing.
Not great, right? U.S. down 7%. Tariffs certainly affecting on a global level. You saw that APAC down like 25% in terms of job posting. Latin America down 11%.
Wow.
Interesting. I think the only Canada and India were like the only countries up. The other thing that we're really seeing that's really troubling is the staffing and recruiting is down pretty significantly, as is HR jobs. Actually, staffing and recruiting for the year is down 28%. HR, human resources, are down over 40% for the year. So if you look at those as being like leading indicators is a company hiring? Well, if hiring, they need more HR people, they need more recruiting people, et cetera. And the opposite is true. If you're going to be doing layoffs, so you're bracing for a layoff, so you're bracing for more turbulent times, we're not going to be hiring. We're not going to be onboarding new people. We need fewer of those people.
Do you want to give like a rough translation? Do you think this goes so far as to say the jobs report tomorrow could be negative or negative in the coming months, or is it more just a softening?
So where are you hiring? Where are you seeing hiring? It's just not enough anymore. You looked at the BLS numbers yesterday, and the BLS numbers are really for March numbers. Twice as many people quitting than hiring. So hiring is it's not fast. People aren't hiring quickly. And that really worries me a lot in terms of that ability to really fill those jobs. Are they actually getting filled? And certainly in the U.S., I sent you some data that was really interesting about the S&P 500. And in 2020, 92% of their open jobs were in the U.S. And in March of 25, so at the end of a month ago, it was down to 78%. Now, it's only 14%, but that's huge.
No, that's big.
That's huge. And so we're talking about jobs that used to be here are now outside of the U.S. Talent shortage, et cetera, lower cost of labor. And we've seen that happen in the S&P 500.
And just lest anyone be tuning in for the first time and think you're a Cassandra, you guys were very consistent over the past couple of years. We've been doing this every month. We've been checking in with you, and your data is always, okay, labor market's kind of churning along. There's more of this, less. This is the first time I'm noting this shift, so I just want to call this out. The bright spot also is one that might make people chuckle, AI jobs. So as companies are looking to get more efficient, if you can help with that, great, but they're usually doing so, my guess is, in the long run, to trim headcount.
That's right. And the other thing that was interesting, and we pointed out in the data, some areas that were hiring AI jobs were like a big push in insurance and nonprofits and marketing. Marketing was up 52% in terms of the jobs that they were looking for that actually had AI in them, AI-oriented jobs. So AI jobs are not just in software engineering or financial services. It's moving. It's really becoming more mainstream. Unfortunately, it's really focused on the hotspots, California, New York, Massachusetts, and Washington. So the Midwest and South are really underpenetrated in terms of those overall jobs.
Great point.